Tomorrow we have an FOMC meeting. If you've never heard of that or you've seen it on subreddits and you're not sure what it means, I'm going to explain everything about it in 6 minutes and exactly what to watch for tomorrow specifically. So why does the market hold its breath? Because the decision is the boring part. The real event is a forecast they publish called the dot plot. A brand new Fed chair's first press conference to the addition makes it a super catalyst. Here's how to read it like a trader with tomorrow's real numbers. So who decides? First, there is 19 people sitting in the room giving their own view and predictions, but only 12 actually vote, and a simple majority sets the rate. 7 are the board governors, the rest are regional Fed presidents. And here's the key part. Nobody outside that room has the power to vote. Not the president, not the Congress. The Fed is independent by law. At 2 p.m. Eastern, it all drops at once. The rate decision, which is basically settled, and the big one, the SEP, the Fed's forecast for growth, jobs, inflation, and rates. That rate forecast is the dot plot. Then at 2:30 p.m., we have the chair taking questions, which often moves markets more than the decision itself. So remember, the rate is a non-event, the dots are the trade. So what's a dot? Each of the 19 answers one question. Given my forecast, where should the rate be at the year end? It's anchored to the Fed's dual mandate, 2% inflation and full employment. The dots are anonymous, equal weights, and you see the spread, but not what each person voted. And the median, the middle dot of the 19, is the single number that the whole market trades. Here's the real dot plot from March. The median sits at 1 cut for 2026. But look at the red dots. 7 of 19 want 0 cuts. The median is hanging by a thread. It takes just 3 more people nudging their dot up, and the headline flips from 1 cut to 0. That flip is the most important thing to watch tomorrow. So how does a dot become a cut? It's just the distance from today's rate to the dot in 25 basis point steps. And because everyone plots on that grid, the median doesn't drift, it jumps. Move 3 dots and you lose a whole cut instantly. And the rest of the forecast matters because inflation got revised up to 2.7%. And that's exactly what's dragging these dots hawkish. What are they even cutting? It's one rate, the Fed funds rate. What banks charge each other overnight? It sounds tiny, but it's the base of everything. Credit cards, mortgages, car loans, all priced on top of it. And for stocks, higher rates shrinks the value of future profits and makes cash compete with the stock markets. And that's why one number moves your whole portfolio. 3 ways tomorrow can go, and judge each against the market already leaning hawkish. Holding at 1 cut is actually a mild relief because everyone's braced for the worst. Dropping to 0 cuts is hawkish. The stocks will dip, led by growth, but it's partially priced. And 2 cuts would be a shock rally, but it's the least likely, coming in at a 3% chance for tomorrow. The last thing, the big question, can the Fed cut with inflation at 4%? Yes, it's done it in the past at CPI near 6% in 1990 and 5.6% in 2008. But both times was a recession that was bigger than the threat that it forced. And that's the key. There is 2 kinds of cuts. There's the good cut, soft landing, stocks rally, and the bad cut, the recession where in 2008 the Fed cuts to 0 while stocks fell about 50%. So a cut isn't always good news, but in regards to tomorrow, it will be slightly different. So here's the recap. There is 19 forecasts. 12 of them actually vote. Nobody outside counts. The hold is settled. The dots are the trade. The median is 3 dots from flipping. They cut 1 overnight rate that reprices everything you own, and high inflation cuts only come when a recession forces them. Bottom line, watch the path, not the level. Good luck, everybody.